Hello there, my name is Adeel, a certified investment advisor, and welcome to part 2 of the CISI Level 3 practice questions. In this session, you'll go through 25 multiple choice questions designed to reflect the real exam format. Each question will appear on your screen for approximately 60 seconds, followed by the correct answer, a short explanation, and reference to help you understand the reasoning. I recommend taking this practice test only if you've completed your study and are preparing to sit your final exam. Get ready, stay focused, and treat this like the real test. Let's begin the test.
Question 1. An advisor wants to select a unit trust that is benchmarked against the FTSE All-Share Index and which will be suitable for a cautious investor. They should select the one that has a beta of A. 0.5, B. 1, C. 1.5, D. 2. Question 2. A client has become incapable of understanding the information sent by their advisor, and hence the advisor now cannot sign off on suitability as per an annual financial review. What should they do about the investment portfolio that they are managing? A. Continue to manage the portfolio. B. Continue to take the client's instructions. C. Take instructions from the nearest family member. D. Take no action until an attorney is appointed. Question 3. If a government increases its spending and finances this through the issue of government bonds, this indicates that it is adopting what type of fiscal stance? A. Contractionary. B. Expansionary. C. Neutral. D. Recessionary. Question 4. Why would an investment fund seek UCITS status? A. In order to be marketed and sold throughout the EU. B. In order to be authorized to be marketed and sold to institutional investors. C. In order to become listed on the stock market. D. In order to be authorized to engage in a higher level of gearing. Question 5. Your client is the founder of a company and is concerned that if they were to become very ill, it could have a serious effect on their business. Which type of cover would be most appropriate to consider? A. Accident and sickness protection. B. Income protection. C. Key person protection. D. Medical insurance. Question 6. Which of the following arrangements might be used by a firm to avoid a conflict of interest? A. Disclosure. B. Financial promotions. C. Know your customer. D. Suitability. Question 7. Under the efficient market hypothesis, a market is unlikely to operate as a strong-form efficient market due to the existence of A. Insider dealing rules. B. Money laundering regulations. C. Best execution procedures. D. Data protection rules. Question 8. Which type of collective investment scheme, CIS, would you expect to trade at a discount or premium to its net asset value, NAV? A. Unit trust. B. ETF. C. Investment trust. D. CISI. Question 9. What factor is irrelevant when assessing a defined benefit, DB pension? A. Age at which benefits can be taken. B. Expected amount payable. C. Investment performance of the fund. D. Lump sum available at retirement. Question 10. A money launderer is moving funds between currencies, shares, and bonds. This stage of the money laundering process is known as A. Integration, B. Investment switching, C. Placement, D. Layering. Question 11. An investor is receiving half-yearly interest of $90 on their holding of $3,000 Treasury 6% bond, which is currently valued at $3,600. What is the flat yield? A. 2.5%, B. 3%, C. 5%, D. 6%. Question 12. The central bank announces unexpectedly that short-term interest rates are to rise to 6%. What is the most likely effect on a holding of Treasury 5% bond? A. The coupon will fall. B. The coupon will rise. C. The price will fall. D. The price will rise. Question 13. What is the principle behind the regulatory requirement to categorize clients? A. Determine risk tolerance. B. Establish regulatory protection level. C. Prevent money laundering. D. Determine disclosure level. Question 14. A parallel shift in the demand curve to the left might be caused by which of the following? A. Rising price of a complement. B. Falling consumer income. C. The good becomes fashionable. D. Increasing disposable income. Question 15. Your client is age 70 and cautious. Which allocation is most suitable? A. 5% cash, 25% bonds, 70% equity. B. 10% cash, 35% bonds, 55% equity. C. 15% cash, 50% bonds, 35% equity. D. 50% cash, 50% bonds, 0% equity. Question 16. Which statement is true in relation to options? A. Buyer of call can sell. B. Buyer of put can buy or sell. C. Seller of call can sell. D. Buyer of call can buy. Question 17. The fund returns 13.2, 2.6, 1.3, 4.2, 3.5, 2.1, 10.7, 9.4, 4.1, 9.0. What is the range? A. 4.2%. B. 8.35%. C. 13.2%. D. 16.7%. Question 18. If a company's Z-score is negative, it likely indicates A. Volatile profits. B. Imminent insolvency. C. Low gearing. D. Reliance on limited customers. Question 19. Which is not an advantage of collective investment schemes? A. Control over asset choice. B. Diversification. C. Expert management. D. Economies of scale. Question 20. When does a spot FX trade settle? A. T plus 0, B. T plus 1, C. T plus 2, D. T plus 3. Question 21. Which metric removes cash flow impact when measuring performance? A. Total return. B. Time-weighted return. C. Holding period return. D. Money-weighted return. Question 22. Which measure best shows leverage within a company? A. ROAS. B. Debt to equity ratio. C. Asset turnover. D. Current ratio. Question 23. Which correlation coefficient is weakest? A. Plus 1, B. Plus 0.2, C. 0.5, D. 1. Question 24. For reduced WHT via relief at source, investor must A. Use double taxation treaty. B. Register as expatriate. C. Pay premium. D. File dual returns. Question 25. What is the premise of KPM? A. Diversification reduces risk. B. Expected return. Risk-free plus risk premium. C. Beta captures all risk factors. D. Markets always efficient